Numerous people will be harmed if crypto platforms continue to operate outside of established policy frameworks. If cryptocurrency exchanges and lending platforms are not included in the regulatory framework, a lot of people will suffer, U.S. Securities and Exchange Commission Chairman Gary Gensler testified before the House Financial Services Committee. If we do not bring these crypto exchanges and lending platforms within the public policy framework, a lot of people will suffer, Gensler said Tuesday. It is a highly speculative notion that a token on the possibility that it will become valuable in the future due to the fact that others will pay for it. Gensler was grilled on the dangers of cryptocurrency trading, the popularity of retail investing, and the looming debt ceiling crisis. When asked whether the SEC could ever prohibit crypto trading in the same way that China does, Gensler responded that any prohibitions would be up to Congress. Our approach is genuinely unique. It's a matter of integrating this field into our investor-consumer protection framework and collaborating with bank regulators and others to ensure that the Treasury Department incorporates it into any anti-money laundering and anti-tax evasion efforts. And, of course, the issues of financial stability that stablecoins may raise, as Gensler put it. The SEC's mission, Gensler noted, is to facilitate capital formation and investor protection, while also promoting fair and effective markets. Gensler noted that the SEC is examining rapid changes in technology, such as predictive data analytics, artificial intelligence, and machine learning. Gensler cautioned that there is insufficient investor protection in crypto finance. Many of these crypto projects are essentially saying to the investing public, "Give us your money, and we will build something with a small group of entrepreneurs and computer scientists." And, as a result, there is hope and expectation of future reward or profit. Numerous these are classified as speculative assets. Gensler added that the SEC's authority in the cryptocurrency space is well established. I invited representatives from various projects to come in and speak with us. Congress used a broad brush to safeguard the public against fraud. We require coordination with numerous congressional committees and the Commodity Futures Trading Commission, he explained. Stablecoins and the banking regulatory regime both have flaws. We have two outstanding market regulators, the SEC and the CFTC, and several distinct authorities. We do not require additional regulators. Gensler compared certain cryptocurrencies to investment vehicles and others to speculative assets such as gold and silver throughout his testimony. The US dollar is the world's most widely used currency. Numerous these cryptocurrencies are not true currencies. However, the majority are investment vehicles. A few may be competing with gold or silver as a digital speculative store of value, just as gold has historically been a speculative store of value. Bitcoin is considered to be a highly speculative asset. It is also a de facto store of value, similar to gold. Gensler emphasized to U.S. lawmakers the risks and potential conflicts of interest inherent in retail trading and order flow payment. Zero commission does not imply that it is completely free. Certain brokers receive compensation for order flow, he explained. When we withdraw from payment by order competition, there is a potential for conflict of interest when an order is routed to a wholesaler. That is not the optimal execution. According to Gensler, one of the most significant risks to investors is stablecoins, which he likened to casino poker chips. If this trend continues, it may pose systemic risks, he said. However, poker chips are a good thing in a regulated environment. With the debt ceiling deadline of October 18 looming, Gensler also stressed how significant uncertainty would be if the US defaulted. we would be venturing into uncharted territory. We will be living through a period of extreme insecurity. The markets would experience significant volatility, and the system would experience some breakdowns. We'd face some of the most severe challenges our financial sector has ever seen. Much greater than what we've seen previously. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.